Good evening and welcome back to Be Rich. I have my good friend and nephew Shashwat Swaminathan with me before he's leaving to university. So we will record the last two programs. The first one is going to be about the debt and the Federal Reserve. The second, we will talk about cryptocurrencies. It will come sometime separately. So today we are going to discuss about the Federal Reserve and its role in debt creation. So I am also eagerly awaiting to see what Shashwat has for us. Let's dive into it. Shashwat, what do you have for us?
Okay, so first off, the latest rate rise was for 0.75 points, and that was in a response to the 9.1% inflation they saw before. And currently, the data which the Fed posits is that inflation has fallen from 9.1 to 8.5. Although the Fed have clearly said the battle is nowhere near over. There is too much inflation and we're still fighting it. We're nowhere near the end, is what the Fed has said officially. But the market thinks that 9.1 to 8.5 is a good enough indicator that inflation might be transitory. That's what the market thinks from the way it's trading. So coming to that point, inflation has fallen from 9.1 to 8.5. But an interesting analysis which was given online was even if inflation month over month from now till December till the end of the financial year, even if there was 0% inflation from now on, the overall inflation for the year would be 6%, which is still way above the 2% mark which the Fed is trying to reach. So it's very clear, at least from a statistical perspective, that we are nowhere near the end of the battle. Although the market believes that we're going to have a soft landing and we're close to this thing. And secondly, double whammy in a sense, the emerging market borrowing. Let's leave aside the COVID decade. The decade before the COVID decade, the emerging market borrowing grew from 3.3 trillion to 5.6 trillion dollars, from one quarter to one third of the global output, US output. So that's another point which I wanted to bring up, and I wanted to connect this to what's happening in Sri Lanka, Kenya, and all those countries where emerging markets are now defaulting on the debt which they borrowed upon. So, what do you have to say about that?
On inflation, this reading is basically based on lower fuel prices. The US has released a lot of strategic reserves and they have doused the price of US Texas Intermediate. At one time, the gap between the Texas Intermediate and the Brent was at $8. Even now, the gap is about $5. And in the last week, from $88, the Texas Intermediate has gone to light crude oil is back at 80, 92 or 94. OPEC is not going to be sitting quietly. The moment they see correcting prices in oil, they'll tighten productions.
Right.
Ukraine is now saying whatever sanctions in Russia are called phantom sanctions. They are not actually sanctions.
Phantom sanctions.
Because that means Russia is happily selling crude.
Okay.
So any major Ukrainian attack on Ukrainians, people will ask for greater sanctions. The markets have become unhinged because there is no correlation of prices of gas in Europe and America. So American gas prices will go up.
How has America been able to regulate their gas prices?
Because gas is not easily transportable like what crude is. Crude you can put on a tanker and move it across the Atlantic. It's not going to be like that. So American gas prices are set to go up. Crude prices will go up.
Where? In America or everywhere?
In America, either the OPEC will, if it falls below 80, OPEC is going to come in.
Right.
So one way or the other, crude is going to go up.
For everyone.
For everyone. So there have been two raises of 0.75 and 0.75.
Yes.
And it's only fuel. Core inflation has touched 6%. So core inflation is still climbing. Core inflation, which is the Fed's chosen measure, that is stripped of food and fuel.
Right. The volatile prices.
Yes. And food price, if you strip off fuel alone and keep food, prices have gone up. Food prices have gone up. Worldwide, there is a drought. So this battle is nowhere won. The wage pressures are very high. The job numbers were way off the target. The maximum anybody had was for 3,25,000. So it went up. So there is one guy called Neil Kaskari. I think he's the Kansas City Fed. He said immediately the market has got it wrong. The Fed is going to keep raising the rates. Sometime next year it will pause and wait for inflation to fall.
So they'll get to a point about say 3 or 4%, and then they'll wait and watch.
That number is doubtful.
Yeah.
In fact, a lot of people ask what I asked Rajan when we met him in Raipur.
Yes. What will the Fed chicken out?
So I asked him, will the Fed chicken out? And
Yes.
he said, I'm not an astrologer first.
Yes.
Rajan told me I'm not an astrologer.
Yeah.
Then I said, no, you did predict the housing bubble. So he couldn't say anything. He said, anybody who says that he can predict the future direction of inflation is a charlatan.
Right. But didn't he say that Powell won't have the nerve?
No, he didn't say that.
He didn't say that.
He said, if they see and they are convinced,
Oh, they'll wait and watch.
they will wait. If inflation drops,
Yeah.
they will pause. This is what he said.
Okay.
Now, I think there has been a 0.25 move before that 0.75. So 0.25, 0.75, 0.75, 1.75 is done.
Yes.
So now we are at 2.25 plus. If the job reports are very strong in September and crude flares up for some reason, you will still get a 0.75 in September.
Right.
Otherwise, you may get a 0.5. This is what I think will happen. Unless something dramatic happens and he does a 0.25. But if he does a 0.5, that means interest rates are just going up.
Yeah.
Along that, what you have to realize is he is doing a quantitative tightening.
Yes.
Bonds that are matured, he is not buying back.
Yeah.
That means he is not holding the balance sheet at the same level.
Yeah.
He is slowly allowing the balance sheet to drain. So the balance sheet will the size of the Fed balance sheet will drain at some tipping point. Nobody knows what is the tipping point. The liquidity in the system will get sucked out. Now there is so much Kool-Aid that the market is going up.
But can he suck out the liquidity without actually actively selling? Like just allowing them to expire is enough.
That's what he's doing today.
Okay.
It's slowly doing, but it's going to be at the rate which he is talking. Within 12 months, it will be $1 trillion out
Just through expiry.
just through expiry.
Okay.
So $1 trillion of the market is definitely going to affect it at the margins. That's why you can already feel that SoftBank is helping.
Yes.
Startups are finding it difficult to find money. Mortgage rates in America have gone through the roof because in America, important component of inflation is housing rentals. Housing rentals are through the roof. So until rentals come down, you are not going to see any big change.
But Schiller was careful to not call it a bubble, right?
I do not know whether this is a bubble or none, anything. I am not saying that. All I am saying is this kind of liquidity is unwarranted.
Okay.
So we do not know. I don't think the American stock market is very expensive,
Okay, you think the stock market isn't as exuberant?
as exuberant.
Right.
But inflation has come.
So what do you think is exuberant?
Wage pressures on wages is
Exuberant.
exuberant.
That is unwarranted.
That is unwarranted.
Okay.
And you are not going to have the kind of growth that you had on the rebound.
Right. So you think the pent up growth is gone?
The pent up growth is gone. And consumption has moved from goods to services. That's why India is suffering in merchandise exports. So China will also have lower merchandise exports to America.
At the same time, shouldn't our IT exports?
Our IT exports will struggle if corporates start to cut back. You are already seeing Facebook, Apple, and all the big tech guys doing cutbacks. So we don't know what will happen in 1 year, but I'm for sure I can tell you that strong job report means that the economy is doing well and there is no danger of stalling. The Fed will tighten. Whether it will end at 3.75 or whether it will end at 4, I don't know. But I will tell you what Stanley Druckenmiller told me, and I told that to Rajan.
Told you in the sense you read about it.
I read it. So what Druckenmiller said is, never in the history of interest rates has inflation come back to normal rates, that's 2%, without real inflation, without nominal inflation being higher than nominal interest rates
Being higher than
than the
inflation.
inflation. That means inflation turns real.
So capital has to have value.
Yeah. Today you have a nominal inflation of 8.5%.
Yes.
and an interest rate of 2.5%.
Yeah.
You can keep it as 2.5. That means you are minus 6.
Yes.
I don't know what is there to celebrate. And if it's going to be 6 at the end of the year,
No, it will be more than 6 because he
I'm
said,
saying to give the best case. It's
yeah,
6.
yeah.
Let's assume everything has gone right and it's 6. You are going to be at 3.5 or 4.
Let me just clarify, for it to be 6 month over month for the next few months, it has to be 0% inflation each month.
Assuming that it is there,
Okay.
that everything goes right, you are going to have you are still having negative inflation of 3.5%.
Yeah,
Negative interest
if they keep rates same.
if they keep rates same.
Even then, even if you take a 0.75, you,
Even if you take it from 2.25 to 4,
yeah,
you are minus 2.
yes,
So, according to Druckmiller, who has knows markets, he says this has never happened in history. So, definitely, if the rate comes down and you pause,
right,
what will happen is the rates will go back, because you are telling people, I'm going to give you the punch bowl. Economy is 99% psychology and 1% finance. So people are going to think that
good times are back
good times are back, and that's why you are seeing the market rally by 20%.
because they think the soft landing is going to happen and the punch bowl is going to be returned.
The punch bowl is going to. Don't worry, next year, if you last this year, the punch bowl is there next year.
And that's why a lot of these mergers and acquisition firms, private equity firms, are still happy to provide generous terms to their clients.
Yes. Some of them have lost money because they have not been able to find money to pass on the tranches.
But SPACs in specific have been like your guy Chamat Palyapatia has been struggling and been on the down.
All SPACs are, in fact, the other guy, what's his name? A devotee of Buffett, Pershing Square, Bill Ackman,
Bill Ackman.
has returned his.
He wanted to buy Spotify, right?
Yeah, he returned his pack and saying, I have
Oh, sorry,
no.
Universal Music Studios. Or
He returned his pack. So, what I'm trying to
he
say,
returned it.
he said, I don't have any acquisition. What I'm trying to do, all this is a manifestation, SPAC, tech, and all this is a manifestation of excess liquidity. Not one non profitable tech big bubble has gone belly up. You have to see it one, two go belly up before you can call it quits.
Right.
This is what I think. Therefore, I believe emerging markets will be under a lot more pressure than what we have at today. And the Indian trade deficit figures, we had a quick reading in the 2nd of August. The final figures have come, and it is confirms that our exports have contracted, our imports have surged, and therefore our trade deficit is going to be extremely high. And it means, and even in the last report, RBI, in spite of the FIAs becoming buyers in our equity market, you have had a situation where your reserves are coming down. Therefore, the pressure continues and it will only get worse.
And
Even if right September, October, November, December, Jan, in 5 months they raise it only by 1%, it's going to pain.
now that we've sort of established that interest rate rises are sort of going to happen most likely, I have a question for you. Now, with higher interest rates, the US dollar being positive and depending on whether Druckmiller is right and Powell decides to convert real rates into positive rates, positive real rates.
No, I don't think Druckmann says it has to happen, but it will not happen.
It won't happen.
And J. Paul will chicken out.
Right.
And he was a trader, and I asked the economist.
Yes.
The economist also says he will pass.
Right.
He didn't, because he has been a central banker. He was very kind. He said he'll pass.
Wait and watch.
But pass is a very dangerous thing when inflation has entrenched itself.
Right. And coming to debt defaults, sovereign debt defaults.
Already Sri Lanka has defaulted.
Yeah.
Pakistan is on the verge of default.
Yeah.
You will see a lot more defaults.
So coming to that, is there going to be a systemic sovereign debt crisis? One, and if so, what will be India's position in it?
India was very lucky. India does not have a sovereign debt marked in dollars or any hard currency. Right. India has debt only in rupee. Even the foreigners who hold Indian debt in rupees.
Because we haven't had a need to borrow.
Yes, in spite of not having a need to borrow, this lady finance minister wanted to borrow. To all economists, everybody shouted from the rooftops and she stopped it. She was planning to borrow $25 billion. That would have become due and we would have had more pressure. But under the leadership of Manmohan Singh from 91, IMF was the last time he took money outside. So our companies have borrowed outside, our companies will be under pressure.
But that will still reflect in our balance sheet, won't it?
It won't. It will just allow the weak rupee weaken. The sovereign will not default.
Okay, yes, that's a good point. Sovereign won't default, but
And India's two largest companies will not default because their earnings are in dollars. Reliance, majority of the earnings is in dollars, and Tata's have 65% of their revenue in dollars. So, two of India's largest companies,
won't default.
which if they default will send shock waves, are not going to default. So, you are not going to have a major group going belly up.
In India.
India, big group. Okay, maybe Vedanta is at risk.
Yeah.
I'm not saying he'll go belly up.
But he's at a risk.
At a risk because he has a lot of
Foreign debt
in his parent which is listed abroad.
Vedanta PLC.
Yeah. So he's in trouble. But how he will handle it, I don't know.
Coming to the final 2 points. The second last point I wanted to ask you was could a preemptive coordinated multilateral debt restructuring, basically you have debt restructuring preemptively before this
But how will it
crisis
solve?
happens?
Because one man's debt is another man's asset. If we are going to write down this debt, restructuring is writing it down.
Yes.
The other fellow will take a hit. So who is going to provide the flus? Somebody has to print money to provide the flus. Flus is dollars.
Yes.
You print dollars, immediately inflation will go up. So the guy who took the risk in buying this emerging market has to pay the price.
And
Because you mispriced the loans.
right. And finally, the borrowing cost, according to the BOFA Euro High Yield Index, 3% borrowing cost before. For the high yield index has jumped to 7%.
Yes, it will go up further. It may go to 9-10%.
9-10%.
Yeah.
So the borrowing cost for high yield bonds is going to go to 9-10 in Europe.
Yes. Because it's only 7 and inflation is nowhere near. And before by the time you debate whether inflation is there or not, you are going to be in winter.
Right.
So you need more fuel.
Right.
The Arabs are going to be licking their lips.
The who's going to be?
The Arabs.
Arabs. Okay, because they're providing the fuel.
They are providing the fuel.
Okay.
At 70, he'll be very unhappy.
So you're going to give them pricing power.
The pricing power is already with him. He has to just shut up the taps.
Right, but then there will be excess demand, which means that he can jack up prices.
He can jack up prices. And if excess supply is there, he will already
control supply.
He'll control supply.
Right.
All it takes is Saudi Arabia to turn off the tap.
Yeah. So that's all I have for you.
Thank you. Thank you. I enjoyed doing this.
Yeah, thank you.
Thank you for watching Be Rich. If you like this video, hit the subscribe button and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. Good evening and welcome back to Be Rich. I am visiting the historic town of Trichy on the 27th of August. We are planning to hold a meeting in Trichy where I get to meet my subscribers and people who follow me on social media. This will be a live interaction with my friends, followers and subscribers of my channel. It is very interesting. We have had several events in various small towns of Tamil Nadu. If you wish to participate in that event, a WhatsApp number is given below. You may contact us on that WhatsApp number or you could drop an email to the address given below. My team will respond to you. I hope to see you in Trichy on the 27th of August at 6 p.m. Thank you for supporting Be Rich. Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.